Hey, thanks for joining me again, everybody. And this video is going to be about real estate values today and what's happening in the real estate market with the COVID-19 virus. So, what we're seeing right now in many markets is a little bit of a decline in values. I personally get listings sent to me every day from the Florida market. My wife and I are looking to potentially move to Florida, so we've been keeping a very close eye on values in some of the markets down there and some other places too. And so as I'm getting these daily emails and updates, I'm seeing a lot of these homes now are getting their prices cut $10,000, $20,000, $30,000 at a clip. So whereas I've been watching a 10% decline before then, year over year. A 10% increase year over year up until recently. Now I'm seeing the prices get cut a bit. So that's the first thing. Second, there are a couple of other realtors that I've spoken to that are seeing in other markets that are seeing some of the same things. So we've got the market, the economy is grinding to a halt here. More people are losing their jobs over what's happening with the shutdown. We have lenders that I mentioned in another video. Some of the lenders are stopping with their taking applications, or they're changing their guidelines, making it more difficult for self-employed or subprime borrowers to get a mortgage. And that's just one example there. The interest rates are already at an all-time low, and I don't think you can lower them really much more at this point. And even if the lenders lowered their rates, it's not going to change the fact that we're going to end up with a supply and demand issue where there's more supply than demand, which in turn will drop the prices regardless as to where the interest rates are at. So in a healthy real estate economy, when you're and the supply and demand is more balanced, when you lower the rates, it increases the buyer's buying power, and then allows them to pay more for a home and potentially bid the pricing up if it's a hot neighborhood, for example, and they can afford to do that. But now they might be the only one putting an offer in on the house. We know that people are not visiting homes. We know that homeowners that are selling don't want anyone in their houses right now. So that will soon come to an end. Now, when that comes to an end, I don't think this is over, because we've already lost too many jobs. And depending on how long this lockdown lasts, we're going to lose a lot more. A lot more businesses are going to go under, and people will lose their jobs. A lot of people have been furloughed already. And so you're going to end up with a situation where there's no government stimulus package big enough that could sustain people long enough who are out of work to prevent the eventual foreclosure from happening. So I do think that we're going to, my guess is, again, sitting here the end of March 2020, I believe we're going to see values continue to drop even after this is over. And with that said, the longer this takes to be over, the drop will be that much more significant. So I'm going to provide another update to this in a couple of weeks. So come back for that. I did provide an update on what's happening a little bit in the lending industry due to this this virus. You can search for that video already exists. You can look for that one. I'll post it at the end of the end screen here at the end of this video. But if you have any thoughts about the market, again, what I say isn't always right, but that's just what my gut is and what I'm seeing. If you're seeing something different, or you seeing something along the same lines, I'm curious to hear what you have to say. Please leave that in the comments down below. and we'll keep the discussion going in the comments. So thanks for watching. If you have any questions at all, just let me know, and I'll see you in the next video.